Part 2, the characteristics of information. Two different sets of information characteristics, one called fundamental, one called enhancing. Fundamental are primary characteristics of information, enhancing are secondary. There are two fundamental ones, which is relevance and faithful representation. And there are four enhancing or secondary ones, which are comparability, verifiability, understandability, and timeliness. And in order for information to be of value, it needs to try and fulfill all of those characteristics. We'll have a look at them in a little bit more detail. First of all, the fundamental characteristics. It's relevance, and there's also faithful representation that we'll look at in a little while. Information needs to be relevant. Relevant information means information will be useful in order for the users of the financial statements to make decisions. So relevant information helps with the decision-making process. In order to do that, it has to have both predictive and confirmatory value. So that means the information needs to confirm what has happened, confirmatory, and also give an idea as to what might happen in the future, which would be the predictive. Relevant information is also going to concentrate on the big issues, the significant events. Okay, so the nature or the materiality of information makes it relevant. To give you an example, if you had a company that was a stationery company and they forgot to count one pen in their inventory, that would not be significant. It would not be a material amount because it wouldn't actually affect the decisions made by the users of the financial statements. If they forgot to count their buildings, then that would be relevant information because that would be material and would have a significant impact on the decisions made by the users. It's important that you understand the concept of materiality. Materiality just basically means significance, but at the very bottom there, information is considered material if missing it out or misstating it could mislead the decision makers. So relevance is helpful for decision making purposes. Faithful representation used to be called reliability. Faithful representation means reflecting the economic reality over the legal form. Some transactions, the legal form and the economic reality are the same, like maybe when you make a sale in a shop. When you make a sale in a shop, legally the sale takes place when you hand over the goods and the money changes hands, the cash changes hands. Economically, the sale takes place at exactly the same point in time. The economic reality and the legal form are not always going to be the same for every single transaction. If there is any difference, economic substance, economic reality takes precedence. What that allows is that really allows or enables information to be unbiased and free from error as far as possible, and that's the underpinning sort of characteristic of faithful representation. Information should be complete, everything should be recorded, it should be unbiased, as neutral as possible, reflecting the economic reality, not necessarily the legal form, and it should be accurate, free from error. So they're the two fundamental characteristics. There are also four enhancing characteristics. First of all, comparability. Normally, companies will prepare a set of financial statements for a particular year and include comparative information in that set of financial statements as well, enabling users to compare the results for the two different years. If there's any difference between the way in which the information has been presented, or maybe some of the figures have been calculated, that's going to make it quite difficult to draw comparisons. So, if there are any differences, those differences need to be disclosed. Okay, so basically you do the same thing and prepare in the same way every year unless you've got a good reason for doing differently, and if you do it differently, you need to own up to the fact that you've done it differently and disclose the differences. Timeliness. Information needs to be available pretty quickly after the event, otherwise it will become irrelevant. Okay, as it says, the second bullet point there, usually information becomes less useful as time passes. Verifiability. All of the bits and pieces that are included in the financial statements need to be capable of being confirmed. They need to be credible and they need to be verifiable by looking at some sort of supporting document. So a building confirmed to the invoice, something like that, the purchase invoice. The verifiability can be direct or indirect. So that means that first-hand or second-hand confirmation is fine. Whichever one you want to use, absolutely fine. And then the last one, understandability. The information in financial statements needs to be as understandable as possible, which really means it needs to be as clear and as concise as it possibly can be. So using words of one syllable wherever possible, making things clear, making sure that things are in a very understandable, clarified way.